Mortgage costs increase by almost 80%. Let's have a look. Hello everyone, Florian here and welcome to another episode of HeiseSays. Well, mortgage costs are increasing and we've been covering it on this channel for some time, particularly looking at my Excel spreadsheet here. The delta change of repayments that you're going to experience when you come off the super low fixed rates that a lot of us did because we didn't trust the Reserve Bank. And facing reality, you're looking at increases of up to 70%. So I thought we'd jump through and have a look at this article from Mortgage Business discussing just the increase in mortgage costs. So, mortgage costs increased by almost 80%. Now, you've got to understand, if you've had your loan for years and you locked in at these super low rates and then you come off it, you're going to be closer to what you were paying in the past. It shouldn't be a shock to you. Okay? You should be prepared for it, guys. I know it's gonna be annoying, but seriously, we should be prepared for that. It's gonna be the people who bought in during the mania and went right to their limit, and borrowed too much. And they're gonna be doing it a little tougher than others. Although I suspect that's not as prevalent as the media would have us believe. So, rising interest rates have driven up mortgage bills for employee households by a whopping 78.9% for the year to the 31st of March, ABS data reveals. Mortgage interest makes up a larger share of expenses for employee households due to rate increases. The latest data from the ABS. The data shows Australia's Living Cost Index, that is the measure of goods and services on households, rose between 7.1% and 9.6% across all indexes. In particular, the data revealed that mortgage interest charges have had a significant impact on employee households, with a sharp increase of 78.9% over the past year. Indeed, the rise comes as the RBA has lifted the cash rate by 375 basis points over the past year, taking the rate to 3.85%, and the March quarterly inflation figures remain higher at 7%. Employee households were particularly affected as mortgage interest charges make up a large proportion of their expenses compared to other types of households. In addition, the other four household types experienced increases between 7.1% and 7.4% in the same period, slightly above the overall consumer price index of 7%. The rising costs of housing and food, as well as non-alcoholic beverages, were the primary factors driving the increase in these households type expenses. So financial hardship hits 6-year high according to NAB. Just as Australians are spending more money on mortgage repayments, the latest NAB Consumer Insights report for the first quarter of 23 revealed 1 in 4 Australians believe they are struggling very much to make ends meet, up from 22% in fourth quarter 22. Okay, so we're going from 22% to 25%. I want to know what the long-term average of this number is. If long-term average is 5%, then this is drastic. If the long-term average is 20%, then it's not drastic. Not having enough for an emergency was the biggest cause of financial hardship, followed by not having enough for food and basic necessities and being unable to pay a bill. Almost 1 in 4 people who experienced hardship missed a bill payment, while 1 in 20 missed a mortgage repayment. In addition, 6% of people reported hardship due to mortgage payments, up from 5% in fourth quarter 22 and 3% 1 year ago. However, almost 1 in 10 Australians under 50 experiencing hardship said they were unable to pay their mortgage in Q1. The number of people unable to meet minimum credit card repayments or not having enough to pay off personal loans both rose from 6% to 8% in quarter 1. Meanwhile, the share of women struggling also climbed to 28%, from 25%. Okay, so hardship felt across income brackets. The report showed while all age groups were being impacted by increasing financial pressures, those aged 30 to 49, yes, at 18 to 29 were particularly feeling the impacts, with 1 in 3 people earning less than $50,000 experiencing financial hardship in the first quarter of this year. While the percentage remained unchanged for the lower income group, it rose from 27% to 33% among those earning between $35,000 and $50,000. The statistic also revealed that financial struggles were not limited to the lower income bracket, as approximately 1 in 4 individuals in income groups between $50,000 and $100,000 also faced financial difficulties. Indeed, the $50,000 to $75,000 income group had the highest number of people missing payments in almost all categories, including loans from family or friends, buy now, pay later, rent, home loans, or mortgage and payday loans. So there we go, everyone. Let's have a bit of a talk about this one. So we're seeing mortgage costs increase by up to 80%. We're seeing a lot of dire news really on the lower income here in Australia. And actually, let's bring up this chart here showing, well, this is showing you the differences in household income in Australia. Now, you can see the differences between high, middle, and adjusted lower income are quite significant. Those that are right at the bottom are doing it real tough. And I mean, earning under 50 grand a year, you're going to be doing it very tight, particularly if you're trying to rent or if you're trying to pay off a mortgage. Australia is really changing, isn't it? It's not the egalitarian society where it once was. I'd say in many ways, the divide between those that are able to take advantage of the property market and those that are not has widened the gap between the haves and the have-nots. We're going to see intergenerational wealth transferred, particularly with the previous generation starting to pass on to younger generations. And we're going to see quite a divide here in Australia. It's going to be harder for people to use housing and property to build themselves up. And I don't know what's going to make that any easier to address, guys. I think it's just a reality that people have to face, and you're going to have to deal with it. What do you reckon? Anyway, thanks for watching. Let me know your thoughts and opinions on this one, guys. Don't check out that. Check out HeiseBim or Heise Does for other content I create. And if you're a fan and want to support the channel, you can on YouTube or Patreon, using our referral links, buying our pocket squares, or calling us if you need an architect. Take care, have a great day, and I'll see you all in the next episode of HeiseSays. I mean, what's interesting is all the amount of debts that they're talking about in this article that people have. You know, the credit cards, the buy now, pay later loans, all of these little tiny things that are just bullshit expenses that people need to get away from. How can we make that cool again? Maybe we need to make Dave Ramsey mandatory viewing for every Australian citizen. Or have it playing at the Centrelink offices. What do you reckon? Let me know about that idea, guys. I don't know if that'll go down too well.